thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates. Sometimes it could come from the economic calendar, could be something from headline news, or sometimes even geopolitical combination. But also sometimes it gets a little even more cloudy out there, where good news is now bad news and vice versa. So that market sentiment changes, and we just try to give that explanation of what's going on through the minds of these investors that are controlling the markets here. Uh, so what a little bit about myself is I am a loan officer. I do work with a national lender, so we do loans in all 50 states. If we could be of service, whether if it's one of your refinances or a purchase, please give us a shot. We'd love to be able to help you out. But more than that, we'd like to be a resource for you. So if you guys got questions about anything, again, pose it. We'll go ahead and try to get that information for you that you're looking for. Without further ado, we'll jump right into it. We'll start off with the economic calendar for the day. We don't got a lot on here today, but like we've been seeing pretty much the week, it is housing data. First, we'll just touch on it. It's not a biggie, but I like to kind of look at the MBA's release of the mortgage loan activity report, or kind of lets us know how many applications are being done on a weekly basis. So if we're off from the previous week, so as expected, expected they are declining. Purchase went down from 261 down to 254 roughly, and that is not so much due to demand, but primarily due to inventory. We still got low inventory, but we also got a lot of people coming in with a lot of money, cash, and stuff like that. So certain areas you got, still above, people asking above asking price. We had one locally here selling for a little over $2 million property. I think it sold for just over 2.2, and that was $120,000 over asking price according to the realtor. So again, we still see some craziness in certain pockets here, but I think in some areas you may see a little bit of slowdown as well. But refinance side, because rising rates, of course, we are seeing a slowdown in that area as well. But here's the one we will give more focus to, and that is existing home sales for the month of March. So it's February data was revised slightly lower from 6.02 million down to 5.93 million. Forecast is supposed to show it shrinking down to 5.8, and it came a little bit lower at 5.77 million. So that dropped by 2.7% from month over month. And of course, if you look at year over year, it's even more than that. And again, a lot of this has to do with, most of this has to do with the low inventory that we're seeing out there in the market. So we're just with people with lower rates. Of course, those people may not want to move as they got very expensive when home prices are higher. So therefore, they may not want to make any changes in their life. They don't have to move. But in the meantime, we don't know when or if this is when or if this will shake out, or at least more likely when. I think if will be answered, but more when this could be be resolved. Sorry about that. Last but not least, we also had a 20 bond auction year bond. It seemed to have gone pretty well, and the market did react positively to it. So we'll kind of touch on that here in a second when we look at the mortgage-backed securities on there. So that was good news right there. But today in the headline news, more or less, we got some. The stocks are kind of mixed. Nasdaq's down a little bit. There's some disappointing earnings on the streaming devices. Netflix announced that they lost 200,000 subscribers. A lot of it they feel to be coming from with prices, the rising prices. So looking at different avenues of. So now also announced that as a result, they're looking at different avenues to try to recapture by coming lower subscription services, lower price subscription per. So because they're one of the first ones in that sector of net technology, other people are down, like Disney, Paramount, and Warner Brothers. Their streaming device services valuations have come down as well. So what else? We got the Fed. We have a few Fed members speaking out there. They do feel that rate hikes could try to hit what they call the neutral level. On that, it's estimated about 2.5%, and they want to try to get that to that as quickly as possible this year. So we could see what does that mean? Probably means that we might see 0.5% rate hikes, especially in the beginning here. So maybe even as soon as the May meeting. All right, so let's go ahead and take a look here at mortgage-backed securities. We do got an improvement. Yesterday was kind of not a good day to us. We were down 40. We ended up closing down 47 basis points. So we had a pricing for the worst. So we had some reprices for the worst yesterday from when we did this video. Here's today though. You saw the fluctuation here. We came upwards, worked our way up, and we've come back off a little bit. This is right about the 10 o'clock. We were down here about the 10 o'clock roughly, and again when the 20-year hit the 20-year bond auction, we got this kind of reaction. So we got a nice positive. It came back even a little higher, but it has subsided. It has come down a little bit since then too. So it had a nice little positive reaction, but again, it was pretty quickly came back a little bit. But overall, we're still doing pretty well. We're up again about 34 basis points for right now. Treasuries are hurting Nasdaq because they are high growth stocks typically, and those are affected due to higher yields, which will cut into their profit taking. And right now we're down to about 2.84. But yesterday we did touch off right. But what was that, like 2.9? Oh, yeah, we're about 2.95. So again, we're fast approaching that 3% level here, and we'll have to kind of keep an eye on that. But don't want to hit it too soon. All right, folks. Well, last but not least, we'll touch on what the average mortgage rate for conforming loan limit is. These do have points into them, so take it with a grain of salt. The 30-year now is at 5.27, and the 15-year is at 4.62. So as you've been seeing, these have been climbing pretty rapidly. Now, if you guys, I do see rates out there better than this at times. These are again just kind of an average for conforming limits. We do have programs out there. I did price some jumbos that were better priced than that earlier in the week, and so if you guys need any price quotes, just go ahead and reach out. We'll be more than happy to oblige and work with you guys on it as well. In the meantime, thank you so much for watching. If you guys can help us out, and if you guys like these videos and help us out, we'd greatly appreciate if you guys can like the video and share. We greatly appreciate it. You guys have a great rest of your day, and we'll look forward to see you guys tomorrow. Bye-bye.